Hello, good morning, good afternoon, good evening, wherever you are. Welcome to Breakout Trading Answered, the show where we talk about all things breakout trading. And as usual, we're joined by Mr. Breakouts himself, Tomas Nesnidal. Welcome, Thomas.
Hello, everybody. This is Mr. Breakouts and the other guy. That's Andrew's new nickname. And welcome. We're super excited to talk about another series of how to make breakout trading work.
Exactly. And I remember, Thomas, in the last show, I got super excited because I thought that was the last one, but it wasn't, right? We've got this one. Is this one really the last one? Am I right this time?
That's a tough question, Andrew, because I was thinking yesterday.
There's another one. Is it?
Maybe.
Okay, maybe.
This is definitely the last one about market categories because we don't have any market category left. We covered all the futures market categories, at least for the US futures. We even covered European futures markets. So this is really the very last category left, unless we want to get to some very, very exotic categories where we can't even, get access data to or stuff like that. So let's say this is the last category, which is tradable and everybody can create breakout strategies on. However, I was thinking maybe, and I still have to think about it, maybe we still could do one more as a part of the series, how to make breakout trading work. That maybe could be some kind of summary, or we could talk a little bit about portfolios. So let me think about it. I'm not promising it is the last one, but I'm not promising it is not as well. It just came on my mind. Maybe we should do some conclusion. What do you think?
That sounds like a good idea, actually, I think. Yep, absolutely. So and then for people watching who might have gone, oh no, it's the end. It's not the end because we've got something more coming after this one, which we'll share later, I think, or maybe another day. But it's not the end of the show. It's just the end of this How to Make Breakout Trading Work series. So there's more coming very soon. Now, I just want to make a comment that this show is actually pre-recorded. So it's not going to be live like all the other ones. So if you're posting comments in the chat and we're ignoring you, it's because we've recorded this a few days ahead of time. Basically because neither Thomas or I can make it. We've got other engagements on that day, but we really wanted to make sure that we, release something for you. So thanks for coming to the show today. I hope you enjoy it. I know Thomas has got a lot of great things to share, but this one is pre-recorded and we will be back live again very soon. So the final topic is meets, how to make breakout trading work in meets. So where do we start, Thomas?
So we talk about all the future markets categories. And I think that after the tremendous job we did, we deserve some burger, which is a great celebration of achievements.
So long as it's five guys.
Yes, 5 guys. So I thought we would bring up meats. No, but let me explain. So meats is the very last category that I spared for the very end. And the reason why I spared it for the very end is not necessarily because it would be the toughest category to create breakout strategies on. This is not the case. I would say meats are quite all right, not terribly easy, nor terribly difficult, but it's doable. It's quite all right. The reason why I brought it for the very end is basically because this category is least of my interest, and to be more specific, least of the interest of my hedge fund. And the issue with meets is that meets are markets with very, very low volume. So when we were assessing all the markets, when we launched our hedge fund, before that, we did a thorough analysis of all the markets in terms of tradability. And we had to exclude a couple of markets which we knew wouldn't really be appropriate for our hedge fund because we could run into the problem of executions and slippages and liquidity quite fast. And that market category really meets. So this way meets got out of our interest. Yet we developed a few strategies, at least for lean hogs, which I'll talk about in a minute. And we deploy them, but we deploy them in very, very small sizes. So that's why it's for the very last, because it's also the very last category that we we created the breakout strategies for in our hedge fund as well.
And some might say you've left the tastiest one to last.
Yes, absolutely.
Joke. All right, shall we move on? Let's pretend that never
Yes.
happened. Oh
Yes.
dear. Okay, so how to make breakout trading in meets.
So I also have to say that this episode might be a little bit shorter because I don't have that much to talk about. Definitely not as much as about some other market categories. Plus, it is pre-recorded, but at least let's do our best. So let's even talk. Let's start with which meat markets we have in general. So in general, there are four meat markets, which are live cattle, lean hogs, feeder cattle, and pork bellies. And you can already see on this table, like when you take the very last one, pork bellies, you can see that the volume, the daily volume, is super high, although this can be just a different delivery month. So let's take the lean hogs and feeder cattle. That's better of an example. And we can see that the volume is around 3,000 contracts per day, which is really, really low, because if you consider that the trading session lasts about, I don't know, on average 6 hours, that means that you have some 500 contracts per hour, which means that you have on average not even one contract per minute being traded, which is really, am I calculating that well?
Probably, yeah.
No, 50, yeah. So it's really, really low. So the volume is super low, and you have to know that you will get slippages. Although some of these markets can get, like lean hogs, we can sometimes get better volume. But overall, the key requirement with these markets is that you always have to have a bigger average trade, and you need to take in consideration that you will have slippage. Like, you definitely should consider at least 2 ticks on entry, 2 ticks on exit, but you need to test it a little bit and see, because it also depends on how big of a volume you trade. If you have 2-3 contracts, then it can be significantly different than, let's say, 20 contracts. But you need to be very aware of the specific of meat markets. But beside that, I think these markets are quite all right. So these are the 4 markets that we talk about, and if we have a look at the next slide, we basically excuse me. We were able to create viable strategies on lean hogs only. I don't know if we even tried on other markets. I don't recall exactly, because it's been a while since we tested or tried to build strategies on meat markets, and we only have 15 strategies. But again, it's not necessarily because we couldn't create more, just we were not really much interested. We did it like to complete our portfolio, or complete our effort creating strategies on different market categories with meats as well. So we knew that the formula, the Mr. Breakout's formula, works everywhere, and we do have some meats, but it's just 15 strategies, which is really low. You can see that for some other markets we have hundreds of strategies.
Yeah. So I know you just said that you didn't really continue the the testing on the other markets after lean hogs, but in the first slide, I think you said, let me go back actually and see. There was, I think it was live cattle was 3 times larger than, or 2.5 times larger than lean hogs. Was there a reason why you chose lean hogs as the first one?
You know what? Quite frankly, I'm surprised I didn't find any live cattle strategy in the database, and it's been some time. So quite honestly, I don't remember all the details already. I thought we had some live cattle, and we don't. I don't know why.
Okay.
I would have to ask my hedge fund team. I only remember that we gave it like a week. We just said, okay, just let's see if we can even create something on meat. So let's fire up our servers, give it a week. So it's possible either we couldn't find anything, or the week was gun and we only had lean hogs. I really don't remember. Have you, Andrew, had some success with live cattle?
I haven't tested it, but I have tested lean hogs, and I don't remember why I did that either.
Yeah, exactly. Sometimes we just don't remember, but similar story here. Yeah.
Okay, that's all right. All right, shall we go to the next slide?
Yes.
Okay.
So let's talk about time sessions and time templates. So when it comes to time sessions, we totally excluded, as I said, pork bellies, even with our effort to find something. And because we have a special table where we document all the markets that we tried to create some strategies on. And again, I don't remember here if we tried and failed or if we didn't get to it because we just give it 1 week. I really don't remember. But for all these 3 markets, the time template was the same. So for the regular trading hours, the regular sessions are 9:05 a.m. till 1 p.m. The US time, the Chicago time. When we did our research, we found out that the sessions really starts a little bit earlier because the volume already tends to spike around 8:30. So we were working with this time template 8:30 to 1 p.m. And the strategy that we developed, the 15 strategies we developed on Lean Hogs, they all had this 8:30-13 session. So if you decide to pursue these meat markets, I would recommend these hedge fund times 8:30 to 13. And as I said, we only were able to come up with strategies on Lean Hogs. So the time frame, which you can see on the next slide, we could make it work with the 80 minutes time frame. And again, it's really been some time, so I don't remember whether we tested other time frames or not, but all our 15 strategies have the same time frame, and that's 80 minutes only. I couldn't find any other time frame in the database. So if you want to start with Lean Hogs, 80 minutes definitely will do the job.
The old 80-minute time frame again. It keeps coming up, doesn't it? I think you mentioned it. Was it in currencies or bonds or something?
So weird, isn't it? Yeah.
Yeah. Okay. 80 minutes it is. So does that, I'm just trying to do the math in my head and I'm not doing it very well. Is that split evenly between the hedge fund sessions we had in the previous slide?
Probably not.
Okay.
I think probably not. I think there could be the last bar could be shorter because we had 8:30 we have 270. So yeah, it's not evenly split.
Okay.
Again, I wish I remembered all the details, but I don't know. I really don't. It was so out of our interest that we probably should have documented better or something like that. But we didn't.
Okay. No problems. All right. So we've got some examples to look at. I love looking at these examples.
So what I have to say, and this is really annoying, when I had a look in the database, these strategies do seem to work really well in the out of sample. And I was like, oh, gee, I wish we could really deploy them because they seem to work really, really well in the out of sample. But we can't. I think we have just one with very small position, and we just have it to collect data to see exactly what the execution is like and how it changes with different number of contracts. So it's more for harnessing this data. But otherwise, these Lean Hog strategies we had in the database, they seem to work really, really well. So if we have a look on the next slide, so you can see the true out of sample looks beautiful. It perfectly copies the in sample. Actually, it's not in sample. It's out of sample compiled equity on the data that we developed the strategy on, and On the right side from the vertical, that's the true out of sample, true the data that did not exist when we were developing the strategy. And the average trade profit is fairly high. It's $105 after commission and slippage, which I think we put 2 ticks on entry, 2 ticks on exit, which means there is still a room spare if the slip is even higher. The net profit drawdown ratio it's very small here. It's higher than 10. So, if you have a look, this strategy meets all the criteria of a great strategy: net profit drawdown ratio, average trade, sample size, the profit factor. It's really a nice strategy, very well performing. So what a pity that we cannot have plenty of these in our hedge fund and trade them big.
Good for smaller traders though, right?
I think so. When I was preparing these trades, I was thinking about small traders, and I was like, maybe this is a good market for small traders to consider, because obviously there's not an interest of big guys, same like us, because it's not tradable. So maybe there's not the real war of algorithms that we can see in other markets. And I think the big guys, they probably pile up their positions long term, so they do trade it, but like very long term positions. But for swing traders like us, and by the way, all 15 strategies we developed are swing strategies. So for personal trading, retail trading, I think it could be quite a promising market. I definitely wouldn't mind developing strategies as a retail trader just for my personal account.
Yeah. I noticed on this one as well, the percent profitable is 57%, which is pretty high for breakout trading. Does that imply that it's better to use with some kind of profit target to get that?
I think it was because the win-loss ratio is rather low, especially for our normal standards. So there is probably some kind of small profit target. But even with this smaller reward risk ratio, the out of sample performance, it's surprisingly well. So yeah, I think there was some profit target.
Okay. All right. Thanks
and
for sharing
then we
that
had
one.
one more strategy. Yeah, we have one more. Similar, again, lean Hogs, 80-minute swing, like all of them. But again, quite a similar story, a pretty good out of sample performance. The average trade here is 120, which is really great average trade. The net profit drawdown ratio, again, approximately 10. The win percentage is lower here, 51, but it's much bigger reward risk ratio, which is now 1.75. But overall, again, a strategy with perfect parameters, with everything we aim for in terms of net profit drawdown ratio, sample size, average trade, profit factor. All the parameters are there. And the out of sample performance is really, really nice, steady, smooth, perfectly in alignment with the in sample performance. So another reason why a normal trader, retail trader, should consider meats in their portfolio.
Yeah. Also, I've noticed the drawdowns have been quite low in the last two examples anyway. I know that's a small sample size, but yeah, quite manageable with a modest account size.
Yeah, in a sense, it's a little bit frustrating for me.
Yeah. Okay. So was that the last example, or was there another one?
No, this was the last example.
Right. Okay.
So again, I usually present just two from each market, but the rest was quite all right as well. There were some poor strategies out of these 15 too, but overall I was surprised very pleasantly with the out of sample performance.
Yeah. Okay. Now, can you? I know you haven't studied this market for a while, but is there anything you can say about correlations with other markets or behaviors that you aware of for the meats?
That's another thing. This is definitely a good market for a portfolio because, the correlation. I remember that years ago, I studied the fundamental reasons of correlations between different futures markets. And I remember that basically meats in general were quite uncorrelated. And the only interlink there was with some kind of soybeans market. I think it was soybeans meal, which is used to feed animals, the cows and the animals.
Yep.
Yeah. So there was some correlations and some interlinkage just between these two. Otherwise, this is a truly independent market. It's just like it's got nothing to do with oil prices, with index prices, or just very little. It's got nothing to do with soft markets prices, with bond markets. So from what I remember from the study, this was one of the very independent market. Fundamentally, we took into consideration different fundamentals. And I don't remember any specific correlation numbers, but I'm rather sure that the correlations of markets, it definitely will help to decrease correlations in portfolio because these markets are really low correlated to everything else out there. So it's another great reason why to consider and deploy meat markets. I think overall it's a really great category. And now, don't get me wrong, it's definitely, as I said, it's not the easiest, but it's not the hardest as well. It's not as hard as bonds or currencies from what I remember, because we obviously in a short period of time, we got at least 15 strategies, but it's not also the easiest one. You definitely will not get strategies as fast as on indexes or energies or other markets we talk about at the beginning of this series.
Yeah. All right. And then, so what about stress testing as well? Would you stress test within the same market group? And is there anything that people need to be aware of?
The stress testing is quite, I would say, standard. You just stress test it on the rest of the meat. One of them is always off. I don't remember which one it is. I think it was the pork bellies, which I didn't even include. So in the stress test, one of these markets is always a little bit off for some reason. It's definitely a different kind of market behavior. But the rest, the lean hogs, live cattle, feeder cattle, they seem to stress test mutually these three quite well. So if you're failing constantly on pork bellies, that's all right. But on these three, the stress testing should go fairly well.
Yeah. And I think you said for slippage, you use 2 ticks for meats because of the liquidity.
Yeah, but also because I have to think in terms of a little bit higher position. Even if we trade a small position, we still have to trade. I think the minimum we can trade is something like 10 contracts or something like, or even more, maybe 20. So my experience is a little bit biased because I never really tested with 1 or 2 contracts only. But who knows, maybe with 1 or 2 contracts only, the slippage will be on average 1 tick. I can't say, but with 10 or 20 or higher, you definitely need to increase the slippage.
Yeah. All right. Okay, thanks for explaining that, Thomas. So now I think we're up to the quote of the show. And I'm looking forward to this
part. That's my favorite part of this one.
Here we go. You ready?
The quote is, becoming a vegan or vegetarian is a big mistake. And there's nothing more to add to that because that's a big, fundamental empirical truth.
Terrible. That's terrible. Okay, well,
very terrible. Yes. So
I love it.
We're not vegetarians, Andrew, are we?
No, definitely not. No.
we do not want to miss a big steak time by time, and we definitely do not want to miss good burgers, especially these in Five Guys. Yep. And we also don't want to miss some good surf and turf.
Exactly. Oh, you're making me hungry now. Let's stop it. So so thanks for sharing all that today, Thomas. It was really informative, and I hope that people who want to trade the meats found some value in especially the time frame and the sessions. And ask everyone who's watching today to please give us a thumbs up. Oh, Thomas, there's something new I want to try. Here we go, up on the screen. I've never tried this before. Let's hope it doesn't bomb. Please give us a thumbs up for this video and hit the subscribe and bell buttons to be notified when new content is released. It's a new functionality in our streaming software, and I've been itching to try it. And I thought today's the day. So, yeah, please give us a thumbs up. And now, if you've got any questions for this show, hang on, how do I turn this off? Okay. If you've got any questions for the show, please leave them in the chat below. And I think we'll come back in a couple of days after the show's been released, and we'll see what's there, and then we'll decide if we want to, answer the questions in another show or put them in the chat. We'll come up with something. But if you do have any questions about what we've shared today, please post them there, and we'll do something about it.
And also, guys, if you guys have any suggestions, what else would you like us to cover in this series? Making how to make breakout trading work. You can also put some suggestions, or in general, if you would like us to cover anything, just type it below, and at least we will have some good ideas what we can bring to you next time.
Yep. Or alternatively, you can also email us support@bettertraderacademy.com, and we'll get those. Now, Thomas, before we go, did you want to give a little clue about the next series, or should we keep it a little bit secret for now?
Let's keep it for a secret yet. Okay. As a secret yet.
All right, excellent.
For the next one. Yeah. I still have to think about it a little bit more. And we still haven't decided whether this one is the last of the series, or we do the kind of recap, or we will do one more. So
yeah, exactly.
We'll let you know soon, guys. And I think it's going to be another series, and I think it's going to be a cool one as well.
Okay, great. All right. Well, anything to finish up for today, Thomas?
I'm starving.
Yeah, after all this talk of meat and steak, I'm starving too.
Exactly. So thank you very much. This is our first pre-recorded. Maybe we will need to pre-record some more in the future, but as you can see, we don't leave you alone. We keep delivering on our Tuesdays. I'll be traveling next week a little bit because of my hedge fund, having a lot of meetings. So that's going to be interesting as well. And we will be back soon. And enjoy the summer, guys. It's coming, at least here in Europe.
or if you're in Australia, make sure you rug up. It's cold at the moment. So thanks for joining us today. Don't forget to come back in 2 weeks' time, where we've got another show ready for you. So all the best and happy trading.
Thank you very much, Mr. Breakout, and the other guy. Wish you have a great week and happy trading.
Ciao.
Ciao.